Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for Thursday, the 11th of May, 2023. Remember Mother's Day coming up? Do something nice. I got cards already. I had a terrible trading day. I was zigging when I should have been zagging, zagging when I should have been zigging, and it was not my best performance day. And I don't enjoy saying it, but I like being honest. You know, I'll come on and say, boy, my clients are happy. Today, they probably hate me. Not a washout day. I don't want to scare anybody. That's not it. Any losses I took were right within the norm parameter that I had set with stops and so on. But it's just that I wasn't winning. And I've got some trades on that still have promise, don't get me wrong. And we'll see if they can resurrect. That is the word. So what went today? Well, today was your PPI report, and it came in with a wobble. It's definitely dropping to a degree. And as it is sitting here dropping on whatever that degree is in it, and let me just turn that off. Okay. Whatever the wobble is with it as it's going, it caused the markets, especially stock indices, to fall back. And why? You're at a funny time. In the past, the strength of the market caused breaks because people were fearful that the Fed was going to keep raising rates. You're at a transition point where the weaker data, the wobbling data as I want to call it, you're still getting rise in CPI and PPI, but at a much, much slower rate than we've had recently, much slower. And suddenly the market's saying, hold on here, we're weakening the economy. So, too strong does one thing. Now, if interest rates are going to fall back, because you're getting bids, as you can see, bonds and notes, you know, you were under 3.9 today as you're looking at 2 years. So they're slipping in the yields. The market gets scared. That's how transitions happen in markets back and forth. Are we going to get that recession? Don't know. But I'll tell you, if you keep getting weak data, you will. Your unemployment claims jumped on initial, and they went up on continuing. A little bit scary there. Then we're seeing that the CPI, PPI numbers, while up, especially core CPI stayed flat. But the PPI numbers, they slipped back on you. Is that bullish or bearish? Well, that's got the market to think. That's what I'm talking. Then we saw China's numbers early this morning, and frankly, their CPI, what were they up, 1/10? You need inflation to say the economies are stronger. What's happened there is they're not getting the orders from abroad that they were, and you see that in the price of copper back to the 370 level, and the silver market well off the $25.50 level back down here because of the demand factor. And now that's got the market a little bit spooked. So you're shifting things around. Sometimes, you know, you got to be careful what you hope for, you get, and you could have a problem. After the market closed, I'm talking 4 o'clock Eastern time, 3 Chicago in the stock markets, we got notice that the Biden administration and leaders of Congress have jointly agreed to not meet tomorrow. Their staff is making progress. They need more time before the leaders get together. So sometime next week, they'll probably get together and agree in some manner, my prediction, that they will agree to an extension. It makes sense. You've got the border issue. You got the president wants to go to G7. If you looked at the calendar that I published for everybody, it shows you how this June date with Congress, they got their vacations. I'm not being facetious. I am telling you the truth. I published all this. The days off, they're all better off taking advantage of this. This happens all the time. I don't agree with what President Trump last night said on CNN when you got to stop the spending and let the country go into a default, and the Republicans should force that. I'd like to not get to that point. The full faith and credit of the United States should not be done to accomplish that. I do agree with him that if we don't do something, we go broke in the end. Absolutely agree with him. You'll be spending your way into something terrible. Why this particular point? Does he want to do that? Because it suits him. He's running for president again. It would suit him. Look, he took you into a default. So I take what he says and I understand it, and so should you, all right? The best thing we could do right now is kick the can down the road in terms of an extension and see what everybody comes up with that is palatable and good for the country. And we got to help out the G7 members because they are scared. The world should be scared if we go into a default. Okay. As we look at the S&P, you wouldn't know it, but the market is down not even 0.1% for the week. Nothing. It's basically flat. You can see the action here. You've narrowed in. You've taken everything and you're just narrowing in like that. The pattern on the chart, however, is still one of higher lows and higher highs. So I still have the swing line in an uptrend. The battleground is right where I predict that it would take place often. When you're over or under, you go back to the 18-day average to figure out what the next trend is going to be from there. And that's exactly what is occurring. If you look at the upper Bollinger Band and the lower band, those are the numbers that are in play. And you could see you recently challenged it. You didn't quite hit it there, but you did on the lower band, and you went back to the neutral zone, and you're looking to see what next. And momentum is flat. The market's waiting for an event. I don't know what it is. I don't know what'll set it off one way or the other, but I give bulls the credit going home. When I come to the NASDAQ, you're too overbought to get me excited. You're now coming up against the upper band. You're not embedded. You're overbought. I think the market's at the point where profit taking can hit it. Some rotation out of that into other parts. In the Dow, you went down today and hit the lower band and you're not trending. That's where I think the pros covered shorts. First challenge of a Bollinger Band, you'll hear me say that to you over and over and over. That's where the pros, if you're not embedded, come out. What's embedded? Embedded is when the two numbers that make up the slow stochastic are either going sideways over 80, or sideways under 20. And that means that you've locked in a trend, and it's often followed by the market going to higher prices. Got it? I wish I could show you here a bearish one. You don't have it because the stock market's been primarily bullish. When we come into the Russell is a market that on rallies is running into resistance at that line in the sand, the 18-day average, and can't seem to get going anywhere. In the bond and note market, I pointed out to you that the 100-day average has been the support number now in the bonds. It most certainly is. The trend is up, but I think you have very limited upside against the upper Bollinger Band for the time being. I think you're going to spin around in here, not just launch to the upside. Upside, by the way, means falling rates. Same thing with the 5-year note. You're already approaching the Bollinger Band. You failed each time you got there. In the dollar index, I think the professionals got out of longs today. This first challenge of the Bollinger Band where you hit it. Today's high was 101.97, 101.95. You got to round up, and that's what you were at there. I think they stepped away from the market. In the euro, I think they covered shorts. You hit the Bollinger Band for the first time today. Bingo. So that doesn't mean you can't go lower or can't go higher. It's the high probability trade because you're not embedded and overbought and oversold in the markets. In the British pound, I was laughing this morning watching it. Yesterday you go to the Bollinger Band, and I told you this here in this video. I said, I think the pros came out of this market. Tomorrow you got your Bank of England. It's widely expected they're going to go 25 basis points. They went 25 basis points. They even said that if inflation is persistent, they would have to go further if inflation is persistent. And with that, the market down dramatically. You tell me how much that felt. That's a big break, 112 points. Bingo. And right back, what number does it stop at? Is it trending? No. Now you're out of the trend. You don't have any trend, and you're correcting an overbought condition. Again, buy the rumor, sell the fact. In Bitcoin, as I pointed out to you, there's still problems going on here, all right? All these different little exchanges having troubles. Some exchanges, I think it's Coinbase, saying, maybe we don't belong in America doing business, and you're oversold. So, you're down to where the support should come in on that. The differential between Brent and WTI, once you cross back over the red line right here, you start adding the premium. So we got down into the 340 level. Now we're back to the $4 level. Nothing big. And the market is staying underneath the 18-day average. So far, the market is in a bearish trend. The market is forcing the 18-day average down so it has a nearby resistance point. And why would you go up in this? You still have plenty of production. OPEC thinks that demand will stay the same. They came out with their report today for the rest of 2023. I'm not convinced that they're correct. And they don't see big changes to supply. Will they alter things if prices fall? Well, we don't know that yet, but there's another OPEC meeting not far away. The trend is still down here, but to get to the resistance, you break the downtrend. Momentum, you've corrected an oversold condition when you got down to the Bollinger Band, and you've corrected that. I still see the market in a downtrend. Gasoline, what did I tell you back here? Every now and then I hit a home run biggie, and this was it. Here's the market, you're embedded still, and the very next day you lose it. And you go on, you will see on the tapes, today's deal, 3 days ago, I said, I now think you're going to go to the 18-day average of closes before you take that out. Whoops. And what do you think I would have had you do? Out of the market you go, if you're a contra trend trader, and the trend is still at this point, my friends, to the downside with, by the way, an outside day. Let's come back to that if I could. An outside day down. So to know that the market maybe is ready to go up even more, if you take out today's high, right through here, then I can make an argument you're going to make a run to these numbers. If you don't take that out, then you just run into your resistance and it's game over for the time being. And in that gas, it can't get out of its way. There's just no demand for the product yet. We don't have the heat yet, but we are getting into the 80s in large parts of the country, and you want to pay attention to that because it will make offerings of different demand factors come about. And I think that's going to be very, very important. But you heard me talk about outside days. I have a course on it because you get these so often. There are patterns on charts that are edges for traders, in my opinion, if you learn to work with them. Bollinger Bands combined with momentum and the outside days. Now, outside days show up regularly on charts, much more than the embedded reading. They're normally a continuation pattern. I walk you through, there's 9 videos in this course. I walk you through it. I make you look at it in stocks, ETFs, and the futures markets. Walk you through it all different ways. We'll talk about the outside day down, up, what the definitions are, what the rules are, how you work with them. They're often a great way for a continuation pattern. So if you're bearish and you're trying to come into a market, or bullish and you're trying to come in, here's a neat way to do it. And I explain why and how in the course. How do you get to it? All right, that's the simplest part of it all. All you need to do is go to our website under the word education. It's waiting for you there. You can call my staff, or you can just click up here and all the information there is about it. I'm Ira Epstein. I'll see you first thing in the morning. You have a great evening.